So the first question is that, hey sir, I am in the final year of my undergraduate program. I have interned with Deutsche Bank and I have also interned with a boutique VC fund. So do you think that I should join a VC fund right after my undergrad and apply for it, or should I first do an MBA? Hello everyone, welcome to today's video. So today we are going to do something very interesting. We are going to take a look at the world of venture capital. Now essentially I'm going to speak about 5 specific things. First, I'm going to take you through the VC's point of view, that how is a VC fund developed and structured? Who are the investors? What is an investment pipeline? We will talk about that. Second, we are going to take a look from an entrepreneur's point of view, because at the end of the day, VCs are essentially supporting entrepreneurs. So why do entrepreneurs need VCs? Then we are going to talk about the types of VCs that are there. Then we are going to take a look at the work profile, that if you actually become a VC, what precise work you would need to do. And finally, we will take a look whether or not you will be a good fit with a VC fund. If you are an engineer, can you become a VC? If you are an entrepreneur, can you become a VC? So these are key points that I'm going to talk about in this video. Just a very humble request. First and foremost, please like this video. It would indicate to me that you actually appreciate this type of content. And second, please watch this video till the end, because I'm going to talk about the entire VC industry in India. And it might be a great exit option for you. So if you listen to this short video, you will get a lot of insights as to how to go about building a career in coveted career paths like VC, investment banking, management consulting. So let's get this video started. So let's first and foremost understand the structure of a VC fund. Now, venture capital firms are essentially driven with the goal of supporting entrepreneurs. For example, if I am an entrepreneur and if I am looking for support in terms of getting money or in terms of getting resources, then VCs is one of the options that I can execute. That I can go to a VC fund, I can tell them about my business idea and I'll get some funding for my business idea. Using that money, I will then build on my business. I will seek support from VCs going forward in terms of hiring, technology, making connections. So there's a bunch of support that VC funds give to an entrepreneur. Now the question would be that, hey Akshat, why is it that VC firms actually support entrepreneurs? What's the game for them? So the game is very simple, that VC firms actually end up making a lot of money in this process of supporting entrepreneurs. So one part of the equation is to bring a systemic support and change the entire startup ecosystem. But on the flip side, VCs are there to make money. Let's quickly understand that why is it that VCs actually need to make money. So here you need to understand that how VC firms is structured. So on one hand side of the spectrum, you have investors. For example, there will be high net worth individuals like Warren Buffett, Bill Gates, Kunal Shah, who would be giving money to VC funds. These are HNIs. There are also pension funds, wealth funds, sovereign funds, which give money to VCs in the form of investments or loans. Now these become investors of VC funds. Once the VC funds bring this investment pipeline where they are taking money from their investors, they become obligated to generate return from this money and pass it on to their investors. If they fail to do it, then of course, the next round of funding for the VC fund itself would not happen. So to cut the long story short, we have VC funds in the middle. There are investors who give money to the VC funds. VC funds are supposed to generate return on this money. Now VC funds generate money by investing in different high growth startups, identifying good opportunities, good entrepreneurs, making investments in them, helping grow the company, and then selling their equity in form of profits. Now this is how VC funds generally operate. Now there is a term called as investment pipeline. Now investment pipeline essentially means that you have VC funds who are looking for investors and they are opening up that investor pipeline. And when they open up that investor pipeline, investors actually come to that VC fund and start pouring in the money. Once that pipeline is completely built, VCs then move on to the next stage of identifying high growth startups, making investments and generating returns. Now that is the overall nomenclature of a VC fund. Now this brings us to a very interesting topic, that why do entrepreneurs actually need VCs? So first and foremost, let's imagine that if you're an entrepreneur, you might have a brilliant business idea, but in order to get that business idea into a product or in a service, you might require a lot of money. So how do you get that money? You might say that, hey, I have the following options. Number 1, I can contact my friends, family and fools. Now there, the funding option is very easy for you. You can ask your friend for a loan, but there are typically 2 problems that will happen. First and foremost, your friend might have limited capital to give it to you. Unless you're super rich and have a lot of super rich friends, getting that amount of funding might be very difficult for you. So that is the first problem. The second problem is that if you take your relatives' money and burn it and you just mess it up, then of course you are going to spoil your relationship with your relatives because they might not have that business sophistication. If you like this example, do press the like button. It would indicate to me that you actually like this type of content and I would continue to shoot. Your second option in terms of raising money would be that, hey, let me go and ask money from a bank. Now there you will get a loan. Now, there are certain problems in terms of taking high debt, especially when you are starting your own company. The primary problem is that if you start your own company and if it is not well structured, where you are separating yourself as an entity from your business, then it can actually backfire on your personal assets if your business fails. So that is one typical problem that a lot of entrepreneurs face. Now, this is a major problem, and this is precisely the reason why entrepreneurs are so scared of taking high debt on their company, especially when they are starting a business. Now, your third option would be to figure out an angel investor. Now, you might have seen these two terms in connotation that, hey, VC, angel investors. What is the difference? VC firms are more operations and organization driven. They have a proper setup, they have a proper team, proper corporate structure. So it's much more organized. On the flip side, angel investors usually operate on their own. They also have years and years of expertise. For example, Mr. Kunal Shah, he also invests in a bunch of companies and he has a lot of expertise in the startup domain. But is he a VC fund? The answer is no. On the flip side, you have Sequoia Capital, which is an organized VC fund. They have proper structure, proper teams, proper corporate governance, etc., etc. So it's much more organized from that perspective. Now, what is the primary advantage for an entrepreneur to go to an angel investor versus a VC? I think that the bureaucratic setup would be low, but on the flip side, the amount of help that an angel investor might be able to offer to an entrepreneur might be on the lower side because they are not organized per se. So probably I'll make a separate video on angel investors versus VC going forward. But essentially, this conveys the picture that as an entrepreneur, I have limited number of financing options, and going to a VC gives me money. It gives me resources and it gives me a lot of strategic help that I might need when I'm trying to build out a company. Now you might say that, hey Akshat, I understand the money part of it, that hey, if you're an entrepreneur, go to a VC, get money, sounds good. But what other precise help can you point out to that VC firms give out that other people might not be able to give out? So first and foremost help that VC funds end up providing to entrepreneurs in addition to money is very simple, that they provide something called as strategic help. What does this mean? It simply means that, hey, if there is Sequoia Capital, it might have invested in hundreds of companies. Now, they already have a big network. They understand the employee ecosystem. They understand good people who are there in the startup space. Now, if I, as a small-time entrepreneur, have been funded by Sequoia Capital, and if I'm looking for a very good UI UX person who can literally help me launch out a product very quickly, then I can tell Sequoia Capital that, hey, you know what? I'm looking for this particular type of an employee. Can you help me? The answer would be yes, right? So Sequoia Capital can actually help me in terms of making hiring decisions, connecting me with other entrepreneurs from their own ecosystem, figuring out collaborative opportunities. So this ends up giving me a lot of help in the early days of structuring my startup. Now, the second type of key strategic help that VC firms can provide entrepreneurs is that they can really help you accelerate your growth. Now, how do VCs make money? They essentially make money in two ways. One is that they grow the company up to a certain scale. For example, if I've started a company and it was $1 million, now a VC fund can help me grow it to $10 million. Now, essentially, the size of the pie has become 10x. Now, if I had given 10% of my company to a VC, essentially, he or she will now get, with this $10 million valuation of my company, $1 million, right? So in this entire journey of scaling my company from $1 million to $10 million, a VC might have played a very important part. So VCs actually, by bringing in a lot of strategic help, can help a company or an entrepreneur grow massively. So that's one part of the equation, how VCs make money, and in the process they also get rich. The second part of the equation is that VCs can also help entrepreneurs get and launch their own IPOs. For example, you might have heard of a company called as Bumble. You might have heard of Zomato launching its own IPO. You might have heard of Paytm launching its IPO in November or December. So getting to that IPO stage becomes sooner if you're working with a VC fund. Again, in the process, when the company gets listed in the IPO market, VCs have the option of selling their equity because now the company has probably grown more and making money in the process. So essentially, just to quickly summarize, entrepreneurs and VCs, they have a symbiotic relationship. Entrepreneurs come to a VC with their specific ideas, aspirations, and a lot of good work ethic and a great team. And VCs provide a lot of strategic help in fueling that idea and helping a company grow. So essentially, just to give an analogy, when the ambition meets opportunities, that's when the magic happens. So entrepreneurs come to a VC with a lot of ambition, and VCs provide a lot of opportunities, and together they create magic. Now, one parting thought that I will leave you with, that how do VCs add value to a company? It can also be in the form of a brand value. For example, if you go and speak with your friends who are graduating from ISB or IIMs, and if you ask them that, hey, would you want to work with a funded startup or a non-funded startup? Their answer, 99% of the case, would be funded startup. Why? Because they are backed by a VC. They can show more trust. They can have a little bit more faith. So there is a certain brand value going for a company that has been funded by a VC. Now let us next take a look at the type of VC funds that exist. So essentially, VC funds can be categorized into two broad domains. The first would be functional VCs, right? So who specialize in a certain domain or sector. For example, you have Bloom Ventures, which specialize in edtech companies, that are education tech companies. So Bloom Ventures have been supporting a lot of high growth education focused startups. It has a sectoral expertise in that area. Similarly, there are very up and coming new age VCs that invest in certain sectors. So I run a boutique VC fund, which is a small VC fund, and I again invest in edtech startups. Now there are many VC firms that have a sectoral expertise, be it healthcare, be it technology, be it new age technologies like artificial intelligence, machine learning. So that is the first way, the sectoral way of categorizing VC funds. The second way you can categorize a VC fund is by looking at which stage of investment cycle do VCs come in. For example, now if you understand the landscape of investment that happens for an entrepreneur. For example, if I am an entrepreneur, then I might be raising money for the first time. Now that is called as seed funding. Now seed funding is usually up to $2 million. Now if I'm raising money for the fifth or sixth time, it might be called as Series D, Series E, Series F, so on and so forth. Now the amount of money in each round keeps on going up. And there are VCs who specialize in each of these rounds. Now there are multiple VCs who only invest in seed stage companies. Now then there are high-end VCs who only invest in high growth companies when the business model has been fixed. So essentially, you can categorize VCs in terms of their functional expertise, that is if they are specializing in a particular area or a sector, or in terms of in which round do they make investments in entrepreneurs. Now if you tell me that, hey Akshat, you know what? This VC world sounds super interesting. So tell me what the work profile is like and what work do actually VCs do? And if I end up working as a VC, what work am I supposed to do? So let's talk about that. So let me take you through a typical day. So first and foremost, if you're working as an analyst or an associate with a VC fund, then you will have to be really good at market analysis and market research. So think about this. There are sea of opportunities, sea of entrepreneurs, sea of business ideas that are floating around in India and abroad. And you as a VC would need to identify those business ideas. So having good market research skills, spotting a good investment is going to be very important. So you need to analyze businesses that are existing. You need to keep an eye out for good businesses that are developing. For example, let's do a simple exercise. So if I were to ask you that, hey, if you, by you, person who is watching this video, if you were to invest in one YouTube channel in India today that will grow in the next 1 year, what would that channel be? So give a comment. Here, the exercise that I'm making you do is very, very simple, that I'm making you spot an investment opportunity. If you had $1 million, hypothetically speaking, to invest in a YouTube channel today, which channel would you invest in and why? Give your answer. It would be very interesting. And I'm inherently hoping that some of you might take even my name also here. So first and foremost, you must be really good at conducting market research and spotting good investment opportunities. Second, you need to back up that investment opportunities in terms of numbers. So you must be good at Excel, PowerPoint. You must be able to develop growth models. You must be able to build financial forecasts. To what extent do you see that particular YouTube channel growing or that particular company growing? So once you have made this market assessment and market research and backed it up with numbers, you then need to go display people's skills in terms of approaching the entrepreneurs, asking them to make investment, or sometimes when you run a big name VC firm, entrepreneurs might come to you. So you need to have meetings with them. You need to convince them that why are you the right VC to support that entrepreneur. So you need good negotiation skills. You must have technical skills like developing a term sheet, assessing business plan, so that business and people skills come into the picture. So just to summarize, you need very strong market skills, you need very strong numbers driven skills, and finally you need people skills and business skills to assess the business landscape and take a deal from inception to finalization. Okay, so now let's try to take a look at whether or not you will be a good fit with a VC fund. So let me read out a couple of questions from you guys that you wrote to me. So the first question is that, hey sir, I am in the final year of my undergraduate program. I have interned with Deutsche Bank and I have also interned with a boutique VC fund. So do you think that I should join a VC fund right after my undergrad and apply for it, or should I first do an MBA? So this is a very interesting question, and I feel that this person already has built a great profile to get into a VC fund. He has already interned with a brand name Deutsche Bank and has already gained experience with a boutique VC fund. So it's very easy for this person to write his cover letter, resume, during meetings bring up the fact that he had already interned and worked with a boutique VC fund. The advice that I would have for this person is that, number one, it does not matter whether you do an MBA right away or after a few years, it's completely fine. You can apply for the VC job right after your undergrad school and there is a very high likelihood that you will get it. But important point is that you must display your interest in entrepreneurship. The only interest that I saw from your question in entrepreneurship was that you have interned with a boutique VC fund, which is great, but it doesn't display any interest in entrepreneurship per se. So that is the first thing, that go volunteer, do projects with startups. If your college has an entrepreneurship cell, join it, organize some events, organize some talk series with entrepreneurs, etc. That will indicate to a person recruiting you that you are very passionate about the startup world. Congrats, you have already built your profile for a VC wonderfully well. You can choose to do an MBA whenever you feel ready. The second question comes from a female candidate. She graduated from Delhi University 5 years ago. She has not had a corporate job and would now like to wind up her venture and move on to working with a VC. Can she do it? Okay, so now this is a slightly tricky problem. So a lot of missing pieces are here. For example, if this particular person runs a funded startup, that's a plus. If this person actually runs a startup that is visible, for example, if you go on LinkedIn, if you go on internet and you can find a lot of useful information about it, that is useful and that would give her some brownie points. Number 3, people from entrepreneurial background or pure entrepreneurial background do end up working with VC funds, but it is rare unless you have built a company that has seen reasonable amount of success. Now, I'm not saying that you should have acquired millions of customers, nothing like that, but at least your business should have gotten some traction. Only then you can prove that, hey, you know what, I created something which was adding value to people. Now I want to quit this space and move on to a VC because I bring a lot of first-hand experiences of running a startup and structuring ventures, and I have a lot of business knowledge. So if you can speak with that level of strength, then you would be a good fit with a VC firm. But since I don't know enough about your startup, I can't really comment whether or not you will be a good fit with a VC. Now, I hope you enjoyed this video. Please give it a thumbs up and a like and a comment. That would mean a lot to me. It would indicate that you appreciate this type of content, and I will see you on the next video.